Hi guys, welcome to my first ever weekly market review. I'll be going over all different assets, of how the week's played out, what I'm thinking next week, and just everything really. Going through ICT concepts in general, just giving you more insight on how I actually trade and analyse the markets. So I'm going to start off DXY. We're starting off with DXY because it's king. Out of all these pairs, DXY is king, and it's what you use. I'll be starting off with DXY. I'm moving straight to bonds because bonds move. They correlate with the dollar inversely, if you can see. Goes higher, dollar goes lower. And with money in general seeks yield, so it's put into interest, so rates such as the bonds, they're steady, so money flows through into bonds, etc. So you use the bonds and dollar. Right, so we're starting off with a monthly, and if you can just look for the last few months, we've been consolidating in this range right here. You can just see consolidating. It's not a nice price action, so yeah, I don't use trend line like that, but yeah, so but you can just tell last few months we've just been consolidating, and then we'll go down to a weekly and we'll pick PD erasers out that I see fit that could be used. Yep, so this order block here is being used right there. Change the colour. That order block. Let's add some text so just know what we're doing. So that order block's being used. Also, we can have this fair value gap right here. So as weekly PD rates come, we've got this weekly fair value gap. We'll name it just so we know what we're looking at. Weekly fair value gap. So these are the two PD areas I see prices trapped between right now, because we're actually working in within this range right here. So price is not flowing very nice right now. As you can see, what you want is price to come into inefficiency, stops inefficiency, but we're not seeing that. So continuing higher is low probability, and lower, I would like to see the weekly close below. Then we use this weekly fair value gap to continue lower next week. So so reviewing this week, for example, go down to the daily chart. Right, so we've got a breaking structure here on a daily, and we've continued lower into internal range liquidity, weekly fair value gap right here. So while reviewing this week, for example, how would have I showed any of this? And well, how would I have known it was going into this weekly fair value gap, for example? So I've gone to 4 hour. Right. We know it's coming to a daily order block right here, and you see it's reacted very nicely. So on Monday we open price. We have a weekly open price. So I mark out the weekly open price every week, just so as it's because I'm trading the weekly range, and it's what most of you actually are trading the weekly range. So it's good to know where you open within price, because you want to know where the manipulation is, and you want to be getting in positions above weekly open, such as here, stuff like that. Aiming for targets like internal range liquidity. This week was a really hard week because my overall macro bias is bullish. Was bullish this week, going for these highs here, but we have failed when we hit this daily order block. We failed to break above it, so I see it as we're trapped in between two PD areas right now: a daily order block and a weekly fair value gap. And a weekly fair value gap. Now, right, so we've opened on the weekly here. We've manipulated higher into a daily order block, and we've had a breaking structure down here. So we've got highs taken here, right there, a high and a low taken here, right there. That creates a breaker, bullish breaker, these close candles. As you can see, price reacted to the breaker multiple times. Yeah, okay. This is just going through the PD areas. I'm not even profiled it right and properly yet, because this is me profiling for the week. I'll jump into the daily profiles in a minute, and how you can trade these downwards moves into these PD areas or liquidity, such as this low here. So hit off the breaker, expand it down, IOF, fair value gap, continue down from there, going into the weekly fair value gap, consolidated in the weekly fair value gap to close the week. We're coming up to the close today. I would prefer to see potentially, as we've got bullish higher time frame order flow, as I'll show you now. Yeah. Sorry about that. As you can see, we've got high, low, lower high, but we still we haven't taken a swing low out, so we're still bullish higher time frame on the weekly. So I'm not rushing into shorts right now, but it's on my mind if we do break below this if we close below on the weekly, below this fair value gap, we can use this weaker fair value to expand lower, taking out liquidity down here. You get what I mean? But however, if it would be nice to stay above this and we go higher, because I'm still macro bullish bias, and take out these equals highs right here. This is what I'm thinking. Maybe potentially next week, weeks commencing. But yeah, so any trades above weekly open price into this internal range liquidity is a good price. But trading this week when you've got a bullish bias, you've got to really be careful, because you can be longing in here, you could be longing here, you can be long here, and you're just getting wrecked because it's reaching into this fair value gap, maybe potentially going lower. But of course you got to take how it comes day by day. So it's hard to get into these trades when your bias is bullish. You got to be very particular on how you take the trades, and it all becomes, and for me it comes easier when bonds are in sync and you've got market symmetry and you've got clean price action, not like what we've been seeing the last few months. So it's hard to trade these conditions, for example. But yeah, right, now I'll daily profile this, because as we've seen on the weekly, it's just been a classic sell week into this internal range of liquidity. So Monday, I'm going to use, no I'm not, screw that, no I'm not, I'll just go for right. So Monday, we go higher into a high time 3D area, No, we don't. We just keep going higher Monday. So we've just gone higher Monday. Trading Mondays, I don't like trading Mondays because Mondays tells a story and is usually the manipulation of the week. So Monday is manipulation into Tuesday here. So got Monday here, Tuesday here. So Tuesday opens, goes higher into a higher time frame PDA array, daily order block. From here it goes lower, as I've already noted. Then it breaks this swing low, confirming to me this PDA has been respected, and price is order flow, lower time frame order flow is bearish, but high time frame is still not being breached because here would be swing low here is the actual indicator where price is actually going lower if you didn't know it was going into internal range liquidity. So actually trying to get in a position this week would have been hard. So Tuesday lower into Wednesday. So now we've got this. So Tuesday made the high between 2 and 6. So 2 to 4. So London kill zone. So London kill zone is 2 to 5, but I like to work in the range of 2 to 4. We'll go down some time frames here. So when price opens, we've manipulated higher into a high time PD array. Price has reacted here and created the high in London kill zone, which is 2 to 4. This is what I work with, for example. Two a.m. to 4 a.m. to 4 a.m. I'm going to put center, I'm going to put top. Alright, 2 to 4 a.m. As you can see there, highs created in London session. We consolidate through London session. In New York, opens at 7 till 9. We go ahead and we expand lower into London close. Then we just consolidate. So we break structure, come back and test the midpoint of this breaker, react off the breaker, London close, and we head lower for the day. And that's my trading day done. Then price comes into Wednesday. Here we go. We've got lower time frame order flow bearish. Shorts are not high probability, but shorts can be taken in London kill zone. So prices opened at 12, manipulated higher into London kill zone, 2 till 4. Two till 4. Again, 2 till 4, as you can see. Shorts can be taken. Look to the left, it's hitting the bottom of this breaker, and if you go into a lower time frame, let's say 15 for example, this order block, is it touched the top of this fair value gap here? It retested this fair value gap. It's yes, it has. It's touched the top, reclaim this fair value gap. then it's got continued lower. So shorts could be taken here. This is just speculation for the week, just weekly profile in the week. And where do I put the stop? Where's a place I can put the stop? So I like to go for a bit higher time frame. So you can have a fixed stop of 20 pips, because if the Asian range is higher than 20 pips, then you're wrong pretty much anyway. But this high is logical, but these highs are a lot safer. And where am I aiming? You can aim, let's say you've got a fixed RR of 2. You can literally aim here and get 2R, 1%, 2R. It's great risk reward. You know, you can take some partials here, but if you want to aim for down here, you can, but who knows it's going to go down there. You don't. You can aim for this low, Monday's low, market maker sell model, hit Monday's low, take partials, leave a runner into the weekly fair value gap. You can do whatever, but it doesn't really matter because this is all speculation. I didn't take these trades, I was just analysing it and I'm seeing it play out. But when it's low probability, there's no point risking the capital, you see. So that's how we see it. Expanded down Wednesday, large range day. You don't trade after a large range day because it tends to consolidate. It did through Thursday. Consolidated into the weekly fair value gap. Then you get Friday, where it's just an absolute mess. NFP goes lower, and we're just working in this weekly fair value right now. So that's how I would analyse that week. And regards of when the high of the week was made here, make it a significant colour. Let's make it red. Okay, so in terms of when the high was made, Tuesday high all week, 70% of the time. Yeah, that is a statement here, what I'm making. Tuesday high of week 70% of the time, or low of week 70% of the time. So when you've got that in mind, that Tuesday makes high or low of the week 7% of the time, and we're going into a high time PD array, high time frame PD array, then that should play on your mind. Okay, we've got Tuesday, high time PD array, we've got SMT at the highs, we've broken structure down into the downside. We've got a Tuesday high of week forming, classic sell week. Bang. Wednesday opens due to swing higher from the open into a fair value gap, low breaker between 2 and 4, London kill zone, sells higher, New York comes around 7, plays around in here, boom, consolidates, expands lower. So you've got your manipulation, your accumulation, manipulation, your distribution, you get me, power 3, you've got market maker sell models all around here. You've got internal range liquidity into internal range liquidity, which is very hard to trade. And this week here, I'm guaranteed not a lot of people would have got into these trades because of this daily order block being respected when we're bullish, high time frame. You get what I mean? So this is this could just be a move back into fair value just before, boom, we go high and take out these highs here. But if we do close on a weekly below this fair value gap, I would like to see how it reacts in next week into this, in the midpoint of this fair value gap, or just to see, how the weekly will fall through, because I'm not bearish at all right now, and no one should be just right yet. I know we're not moving very high, but if, like I said earlier, bonds, for example, on the monthly, we've been going higher, right? You go to DXY. DXY inversely correlates to the bonds. We've got down, higher, down. It's not correlating at all. What you want is down, 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 down. Yeah? Up, 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 up. You know what I mean? Get what I mean? Like this move down from 23 to October. Got this move higher here. It was consolidating a little bit before, but they are inversely correlated, 100%. Right. I'll show you a proper example. So we've got DXY, an example here. So you see this move in July 2023 to October. The same example I was showing, where the price action is great, just trending upwards. You got the bonds. You come down to here. This move down here. We've got July, boom. This trending market, whoosh, June, boom. July, all the way to October, trending down. This is the conditions you want to be trading in, because price action is easy. But when we come to here and we're up, down, taking out a low, and you go to DXY, we're up, down. Yeah, you get what I mean? Like we're moving in. Bonds are trending higher. DXY is trending higher. We've trended low here, which is really nice price action, and we've gone higher here, but went lower first and took out this low, and we went higher. You get what I mean? Hard to trade, but bonds closing above this daily volume imbalance right here is very nice, but we've got this daily order block here. So I'd like to see how it closes there and how we use that into next week. We'll go lower and taking out these lows down here. Market make a sell model. You want bonds to get in sync with the dollar, because you see euro, for example. Sorry. We've gone higher. We've gone lower. You take G, we've got low there. This SMT here is just ridiculous, pretty much. SMT all over there is just not correlating at all. GU or EU, even AU. Look at this consolidation here. Look at GU moving down like that. You don't want this. You want it kind of correlating to how you want market symmetry across the board. You can probably see gold for the last few months, terrible. DXY higher here. You get to gold, it's going lower, higher, lower, higher. You get what I mean? Well, this price action here is nice. You're getting everything's is sinking in, like in symmetry right now. Like today, not yesterday, on Wednesday. That's when price is in symmetry, and you get these moves that you don't wanna. That you're in, and it's basically the full expansion of the weekly candle, and you can get really good gains from this. So that's my weekly analysis on DXY. I'll go into euro, but it's just inversely correlated, and this is what I'll be trading, for example. So I've already marked it out. So here we go. So we've got Monday lower into what is VI order block. Yeah, you see, we've got this. Let's say volume imbalance here. Yeah, for example. So it comes into the volume balance, respects it, goes higher. Tuesday it goes higher. Tuesday low of week, 7% of the time. Tuesday sometimes low of the week. If you look at GU, for example, so Monday inside, Tuesday, what's that? We've got SMT. So looks here. So on Friday 10 o'clock, and if you go to Friday 10 o'clock, we've got SMT, that's a high time period area, so we've got 10 o'clock right here, boom, look at that, you see, you go to swing low, right here, SMT, so Friday at 10 o'clock, we've got SMT. So we've got bullish SMT on euro, which is very good. We've got Tuesday low of week. SMT with GU, break. We've got lower, higher. Get rid of this now. Got this. So we go lower, higher, breaker. Low, it goes into the midpoint of breaker. Tuesday higher. Wednesday comes around. It's a 30-minute. Wednesday opens. Manipulates lower into a fair value gap. Longs here between 2 and 4. Yep, we're there. 2 and 4. Stops below the recent swing low, or widen your stops. This is the thing. You can widen your stops with this method, because at the end of the day, you don't need a. Let's go this low here. Then you don't need a stop of 5 or 6 pips. You want a substantial stop for if there's news or more manipulation further into these PD arrays down here. You get what I mean? So stops can even be here. Then you're aiming for what? A higher time PD array. Let's have a look. What is there? There's this high. There's this fair value gap. There's this high here. You get what I mean? But I would go for this high, for example. Taken. If you go on a lower time frame, it might be something different. We've got this order block. You got this high you could aim for. Yeah, it didn't reach that high, but it's a target. You get what I mean? But you just keep an eye on what DXY is doing, because we're at SMT with euro this week here. Doesn't mean you're just buying euro. Pound's incredibly strong because you can use futures to show which is a stronger pair. And if you look how strong the pound is, this weekly fair value gap here, if you look on a weekly, is respected, goes higher. For example, yeah, sorry about that. Just wanted to check everything. Yeah, so into weekly fair value gap, higher from the weekly fair value gap, boom. But if you look at euro futures, for example, we're a lot less bearish. If you can see on the weekly, you see all of it, S&T, boom, yeah. So the 9th of May, look at the 9th of May, SMT, You see, right here. So that shows to me, 9th of May, I've got SMT at high time adhere rate, pound stronger. Pound stronger. You know pound stronger because you're looking at the futures. The futures are the real. It's the real market data for each currency. So these what I'm using in here are just CFD. I think CFDs, something like that. Yeah. I think that's it. CFDs created by brokers and price. This is a price feed created by brokers and stuff like that. So you don't want to trust them. If you trust the futures, this is the real price action. This is what takes control of the currencies. So SMT at high time adhere rate, pound's way stronger. You can tell by just recent price action. Market maker buy model. You see, market maker buy model right here. Let's go around and market maker buy model. There's highs here. Want to be taken. I want to take buy side. You see? And let's switch over to my seasonal tendencies chart. And these are a macro bias I use. So June. We moved higher into June. Yep, we did. Into July, we've moved higher. No, we haven't. We've moved lower. So invalid right here. But we do move lower into August. So I would just moved lower earlier. I think so. So if we've got a macro bias on seasonal tendencies as July into August, into September we go lower, into August, or in July to September we go low. Oh, yeah, near the end of September we go lower. As you see, boom to boom. That gives me another confluence if we do get our technicals turning bearish. We've got 2 against 3 in my macro bias, and then I'm getting to COT data for my third. And I do this by hedging program. I haven't looked at this in quite a while, so give me a brief moment. No, I don't like that one. I'll get it on my chart. Go DXY. Just remove drawings. Indicators. Sorry. Diddly daddling. I'm not really full. Here we go. So daily increased in shorts right here by a lot. So how I actually, I'm not going to get into COT data right now, but yeah, you get what I mean. So yeah, that's it for today. I've gone over noting. I'll go over gold, for example. You don't want to be trading this. That's simple. If anything, you want me to analyse it, I will. I'll look at the weekly, for example. Week fair, we've been respected right here. Simple stuff really. Week fair, been respected. Daily, break of structure. So we've got downside, run on liquidity here, high, taking out this high. Anything else coming into this fair could go higher, but in this range, terrible to trade. Absolutely terrible. You don't want to be trading in that, because if you get the high, low to high here, it's trading in this range here, and it's near equilibrium. It's going to be higher, it could go into here. This fair going gap could get respected. Then you're getting messed around, back down into more consolidation. You want a break, either these lows or these highs, then to continue higher, or retrace back down to targets lower. Same goes for silver. Use them to correlate each other. USD JPY, very nice at the moment. It's just lower PD has been respected. Reaction off there, boom. High, boom. Yeah. So it's strong for the GPY, USD, JPY. I'm not going to go into indices right now, but now well, it's just the nicest at the moment. It's moving really nice, and with DXY going lower this week, it's benefited that a lot, and getting in trades has been nice from NAS. It's just really bullish order flow on high time frame. Nothing's stopping it at the moment. It's just great price action. Yeah, boom. IOF. Boom. Go low time frame, looks like a breaker to me. Takes the low, high. Bearish breaker. Right here. If I'm correct. Boom, boom, nah, nothing really gets used but this. Getting in trades has just been really nice. Bullish IOF here. Hi. Yeah, so that's it for today. Thank you for watching, and bye.